Is that how it goes?
Yeah,
okay.
Yeah, you can do it. What's going on, you guys? It's Ricky with techbud Solutions, and I'm here with Ella. So, first of all, I want to thank you again for taking time on your busy day to meeting up, and we finally were able to schedule a day for us to meet up. She's been a techbud member, or a member, and also a subscriber of the YouTube channel for about how long?
Like 2.5 months.
2.5 months, and I think we had our first consultation call about maybe like 2 months ago, if I'm not mistaken. That was super cool. She's an ASU student. We were able to have at least that relationship itself, and she was interested in getting started when it comes down to investing in the stock market. Now we're meeting up, and she just wanted to have somewhat of a another consultation and having a better understanding of a couple questions that.
The day's done.
So there we go, the market is closed, but yeah, we really wanted to cover a couple questions that she had, and I hope that the questions that she has that I answered can guide some of you guys in the right direction. I'm gonna make sure that I cover at least 3 simple tips on how to get started when it comes down to investing in the stock market, so I hope that you guys are all excited. So let's get it started.
So my first question would be, so for me, I'm a waitress.
Yeah.
I work from like 4 to 11 at night, or sometimes from like 11 in the morning to 3 in the afternoon. Is it possible to be a successful trader if you can't really be checking your phone and on the stock market during that time?
Yeah, so I think one of the coolest things about, I mean, you're a student as well, right? And then you have your
I'm sweating.
Alright, so I think one of the coolest things about being a full-time student and then also having a job, that you're juggling the 2 things that a lot of people have already difficulty juggling, yet you're already trying to find another source of income, which I think is very admirable, right? Especially for a lady. It's no question that it's a male-dominated market, and for you to, want to pursue this, I think first of all, that's huge. It obviously tells a lot about yourself. So one of the things that I find to be the most effective when it comes down to being able to juggle being a student as well as having a job is to make sure that you have some form of structure. So something that I'm going to do with you is I want to have a better understanding of the hours that you're going to be working. 4 to 11. Okay, well the market closes here Arizona time 2 p.m. And when everyone else goes through daylight savings, then it closes at 1 p.m. So you really shouldn't have an issue with that. So you are given the chance to day trade and both swing trade. So do you know what those 2 are?
Yes, so could you just verify that?
Yeah, so of course. So day trading is the buying and selling of a stock all within one day. So it's a little bit more volatile. Usually you try to get in and get out, and the returns are anywhere from like 2, depending on momentum trading, it could be exponential, right? Swing trading, we tend to focus on a little bit more quality stocks or ETFs. The charts themselves are a little bit more long-term. We've covered them before, like AMD. I'm sure you've heard of that one before. That one's not doing so well, but that's somewhat of a swing trade. A more type of a day trade would be something like HMNY. HMNY is one that today itself had exponential growth. It had anywhere from like 10 to 20%, and that's huge. Just imagine if you're trading with like $5,000, 10 or 20%. I mean, that could be anywhere from $500 to $1,000 all within one day. And obviously, when we talk about trading in the stock market, momentum trading and day trading is what everyone wants to do. But in my honest opinion, I think if I can work with you and build that foundation for yourself and really like build your eye for value when it comes down to trading and really understanding like the technical side and all the mechanics of trading itself at a much slower pace, we kind of can get the ball rolling. And then with that being said, then making the transition over to a much quicker pace of trading like momentum and day trading would be much more fluid. And everyone, I don't want to say everyone, but I've made the mistake as well that I jump right into day trading when I first started, and I see exponential losses. I don't know how to manage my risk. I don't know how to identify a good quality pick, and I trade based on other people's opinion. And those are one of the 3 biggest mistakes that you can make. So I definitely do think it's possible, but I think as you're starting out and with your busy schedule, especially, we're done with the semester right now, but moving on to the next semester, you can have classes in the morning and then work as well. That might be a little bit overwhelming. And making sure that on a weekly basis, I meet up with you and pretty much just discuss the top 1 or 2 stocks that you're planning on trading this week that's going to get you to your weekly goal. If that's anywhere from 3 to 7% for the overall week, that's not very difficult to maintain. We have a series of stocks that today went up 5 to 6%, and those are some swing trade stocks. Tesla dropped all the way down to $30. We called it out perfectly within our mentorship program, and it went back up to $340. That's over 10% with a multi-billion-dollar company. But it's making sure that I work with you on a one-on-one basis and that we filter and air out all the noise that you hear within the group chats and all that good stuff, and you just focus on what you see value in, you plan out your trade, and you stick to it. That would be my overall goal for you.
Okay, so let's say I was doing a swing trade. Yeah, so how long should I be expecting to hold a stock if I'm doing planning on swing trading?
Yeah, so the really cool thing about swing trading is depending on the type of stock or ETF that you're investing in, the duration or the hold is different for every single one. So something like DGAS, these inverse ETFs like UGAS, CENX, KEM, these are all ones that, and I'll share with you in my watch list. These are all ones that take within 2 to maybe 5 days, you could see about 5 to 10% return. But there's also other companies like Tesla, although it did see that 10% return, that took a matter of a month, and sometimes even longer. So depending on, usually the higher cap stocks, Tesla is a $300 stock. The value of Tesla is $300. So with that being said, the movement within that stock is not going to be as great. But with lower cap stocks, usually stocks less than $30, they tend to move a little bit more. Not as quick as penny stocks, not as quick as those multi-billion-dollar companies, but they give a good fluctuation where you don't have to be so discouraged while you're at work that, man, is this thing pulling back? It's not extremely volatile, right? With that being said, but it moves enough that within a week or maybe 2 week period, it can play out and you could achieve your goal. A lot of people's goal is about 5% a week, which I think is great for new traders. But then once they hit 5% 1 week, they try to go for 10% and then they make simple mistakes. So that's what I'm going to work with you in making sure that on a weekly basis that we just set a set structure, and whenever you have time, 15 to 20 minutes within a week, you do your technical analysis. We'll cover on how to do that. We plan out your trade on the top stocks that you see value in. You set your alerts, so when they become relevant, you can buy a position or take a position. You know what that means, right? So you can buy the share, and then from that point forward, we'll cover that. I think I'm getting a little bit I'm getting too excited, but yeah, that's pretty much it.
Okay, awesome. So how much, when I'm looking at the different stocks, what is the price range I should look if I'm a new trader, just trying to do some swing trading? Okay,
so I think one of the coolest things about when starting out is right now we're all testing the waters, right? If I'm not mistaken, you were doing that simulation trading. Now we're going to go to investing real money, right? And with that being said, I don't think someone needs to invest $1,000 or $10,000 to get started. I don't care how comfortable you are until you prove to yourself that on a consistent basis you can be profitable and you can grow your account. Mm-hmm. Then investing more money makes sense, right? If you can't make money when it comes down to investing $500, what makes you think by investing $5,000 that you're going to make more? It sounds funny, but it's a huge misconception that a bunch of people have. With that being said, I think I would feel much more comfortable. I wish when I first started, I started with anywhere from $100 to $500, something where I can still manage my risk. So if we're trading with $100, and let's say your risk management or your stop loss is always set at less than 4%, with $100 at 4%, the most you'll lose is $4. It's not bad, right? It might not be worth also the profits, because sometimes if you make 4%, then you make $4. It might not be worth it, right? But again, you're swing trading, you're not dedicating a huge amount of time. It accommodates your lifestyle. Mm-hmm. And the really cool thing about it is if we focus on that percentage growth itself, once you build that confidence and within 1 to 2 months that you're like, wow, every single week I've grown my account from 3 to 5%, I would feel comfortable now investing $1,000. And instead of your $4 to $3 days, they're $40 to $30 days, and then they grow from that, right? So it's all about getting the ball rolling, feeling comfortable, building that confidence, understanding what you're investing in, and then making the transition over to investing more money.
Okay, so let's say I have $500 in my Robinhood account.
Yeah.
If I were to do some swing trading, would you recommend that I put all $500 towards one stock, or would you recommend I do $250 towards one stock and $250 towards another?
That's actually a really good question. So, and I think we get that a lot. It's how many shares of a company should I buy even if I'm not getting started? People sometimes have a really big misunderstanding of they don't wait for that full-on confirmation. An example that I can give you is right now for UGAS itself. UGAS has dropped, and I'm just going to throw numbers out there, it has dropped over 11% today. And with that being said, it has not shown any signs of an uptrend confirmation. And people are buying low right now because it is very low. There's no question about that. It's at 52-week lows. There's no question that it's a low price. But they're going all in right now, and there's no confirmation that it's trending up. So it could continue trending down, and because they went all in, they will lose whatever their account value is in that percentage as it continues to drop. I think a much smarter approach would be that, let's say you do think UGAS is a good buy right now at like 580. It has a resistance at about $7, but you want to take a small position now. So if you have $500, maybe putting or dedicating 20%, right? Putting that and then investing in it just so you get in, right? And then once it starts showing the confirmation, you can take a 30% position. And then as it continues to rise, you invest the remaining amount. And you will build the confidence in making sure that, it's just, instead of going all in, you're building that confidence and you're getting that confirmation along the way that you're investing your money into something that is growing. And that's the whole point of investing in the stock market. But yet people, and I've made that mistake myself, we don't wait for the confirmation, we become impatient, and we just take a position all in and hope for the best. And that's definitely not the case. So if you wait for the confirmation, or you take a small position prior to that, even if you take a small position prior to that before it shows the confirmation. So taking 20% of the $500 being the $100 that, your initial investment. I know it might not seem like a lot and you're like, oh, well, I know it's going to go up. We never know anything 100%, right? But if we start getting that confirmation that, okay, I'll take a $100 position now, and then as it continues to break every 50 cents, I'll add another $100, right? And that's what you're focusing on. And then once it gets to its resistance, you'll sell everything. I think, yes, you're not maximizing your overall profits, but your initial investment is so small that if all of a sudden it takes a dip, you can cut your losses, the risk is very minimal, right? So it doesn't discourage you. But then as you're getting that confirmation and it starts to trend up, if you stick to your plan and you buy every 30 cents or 50 cents, then at least you're investing. You're like, wow, I'm doing something that's really good. I understand what's going on. I understand the pattern, and it's building that confidence. And that's the biggest thing. We don't want you to get discouraged. We want you to make mistakes that you can easily avoid, and just simply planning out your trade and sticking to your plan.
Gotcha. So, like you were talking about UGAS, is that the one they said it's really low right now?
Yes.
UGAS?
Yeah.
So let's say you do buy it in at really low because in the past it has been higher.
Yeah.
But let's say your stop loss was like 3 or 4% and it ends up dropping like 10%. But it's so low compared to how it was in the past year or whatever. Would you recommend still staying in it because at some point, whether it's a few months from now or if it's in 2 weeks, that it's gonna go up because the past has been way higher than it is now? I
think there's two things that I would like to cover that with that. So one of the first things is opportunity cost. So you have an initial investment in UGAS, and because it's trending down and because it might take 2 weeks or a month to recover, because you didn't cut your losses, there's going to be a set list of opportunities that it's going to present itself for the meanwhile, that you're restricting yourself from taking advantage of that opportunity because your money is stuck in this free falling position. So that's one thing. Another thing is sometimes one of the things that I've encountered is with UGAS, as how it's playing out right now, is I know that it's at such a low price point that if I sell right now, I'm selling at the very bottom. So again, we talked about opportunity cost. If I'm investing right now on UGAS a little bit over $7,000 so far. My account is to a certain point that the $7,000, I don't necessarily need it, right? Therefore, it could be sitting there for 2 weeks or a month, and if it does recover, then I'm going to be fine because I have money elsewhere that I can pull and then invest when set opportunity presents itself. So if you're restricting yourself and you're kind of hoping that it recovers and you're missing out on every other opportunity, I think it would be a much smarter thing to just cut losses, take advantage of other opportunity that's better, and then once that thing does show the confirmation of an uptrend, to go back to it.
Okay.
Right? But then if it's such a low point and you don't need the money, and then you can still have money to invest in other sets of opportunity, then that would make sense. You have some good questions.
Am I doing good?
Yeah,
okay.
Really good questions.
So is there a way to automatically buy and sell a stock? Let's say on your Robinhood account, is there a way to set that up to do it automatically?
Yeah, so that goes over the list of order types. So when you, again, because you are busy, I'm guessing that's something that would be very effective to know. I don't know if a lot of you guys understand the different types of order types, but you don't always have to buy at whatever the market is selling at. One thing that you can do is if you're trying to buy UGAS, right, and you're trying to get filled at a lower price point. Right now, let's say UGAS is trading at $5.82, but I want to get filled when it hits that support at $5.70. And until it hits $5.70, I don't want to buy because it's not low enough. I can set a limit order for the number of shares that I want with a limit order, which is under order types on the right-hand corner of Robinhood, and click limit order $5.70, and my order will only fill once it hits that price point.
Okay.
So one of two things can happen. It will never hit that price point and you will never get filled, or it could hit that price point and then it can continue to drop, but at least you get filled, right? There's another cool thing that you could also set a limit to sell. That could be very effective. When you already have and own that position, let's say you bought in at 570 and there's the resistance that it had as of today, 670. So I will set my limit order to sell at 669, right below the support. So with that being said, set my order type, limit to sell at 669, and once it hits that price, it will automatically sell.
Okay.
But if it doesn't hit that price, it will not fill.
Okay, that makes sense. Gotcha. Do you have any direction you'd like me to go in?
Yes. So, and I really like what is it you're doing? Like, you're busy with school, you're busy with your work, and you're still trying to add something new to your plate. I think that's something that we could all say that's pretty admirable. Now, I think one of the most important things that I think people lack in is structure when it comes down to investing and the discipline that is needed. So, waiting for the confirmation, only taking positions when they're good positions. Even if you have to go 1 or 2 weeks without taking a position because nothing hits your criteria, so be it. You're doing this as an extra source of income, and you don't invest your hard-earned money until you get that confirmation that it's a good deal. One of the markets that I think is a little bit easier for me to understand, or for people to understand, because it's tangible, is like the buying and reselling of cars. I understand, the 2015 GTR. I understood what the prices would sell for that specific car, so when I found a deal and then I got it to a lower price point, I'm willing to buy that car because I understand that what it's actually worth. If you look at the overall patterns for the charts, if you know what the actual stock and where it's known to bounce and what it's actually worth when it's a good deal, and if you don't wait for that price when you just buy to buy because you haven't purchased a stock within 1 or 2 weeks, that's not going to lead to your success. You might get lucky from time to time, but that is not something that is working towards your goal. So one thing that I want to set up for yourself, or one thing that I'm going to set up for you, is we'll set up a structure where when it comes down to a weekly basis, you'll have your list of criteria of what every stock has to meet, your watch list, and then also kind of like I think I can set up like a 5-step guide for getting started. So the first thing is like your watch list. The second thing is going to be an active watch list. So it allows you to focus on more of the quality stocks. I kind of have that here. So if you see right here, this is my active watch list. But if I go here to my general watch list, there's a series of other stocks. The reason that they're there and they're not here, or the reason that these are here and they're not there, is because they're not trending up. HAWK, so that's Hawk. It just showed confirmation that it broke above $35, and I'm waiting for $35.50. That's why it's there. I have my alert set. So once that alert gets set or triggered, I will take a position at $35.50, and the overall resistance is about like $40. So over 10% potential. I already did my own due diligence. So what we can do is we'll have your active watch list, your active watch list. Then we go into breaking down. We can set up every week on. It would have to be according to your specific schedule. So let's say Mondays are the least busy for you. Let's say just hypothetically, right? For 30 minutes, I'm going to dedicate 30 minutes every single week to look through my watch list and see what stocks are doing well in my active watch list, set my alerts for every single one, and then plan out 1 or 2 trades if I see value in those. And then with that being said, you'll have the 2 stocks that you can put on a sticky note on your computer. So every time that you open your TD Ameritrade Thinkorswim account, and then you have your Robinhood application, what needs to be alerted to get that confirmation that it's trending up. It's just much more structured, right? So there's like a step-by-step process that you'll have to do. So for your busy schedule and for, the return isn't going to be there right away, but it at least accommodates and it makes it, more realistic. Instead of investing 5 to 8 hours every single day with a $4 to $10 return, you dedicate 30 minutes within a week, you plan out your trades, it accommodates your schedule, and then once the opportunity presents itself, Ella's there to take advantage of it. So I think that's a lot easier to kind of take advantage of those set opportunities. But yeah, that was a really good question.
So let's say, for me, I'd be doing swing trading, and let's say the stock was like $30. How much, what percentage would you recommend that I cut losses at, and what percentage should I look for when I'm looking for a
I think that's huge. So one thing that we're going to want to cover is when it comes down to your initial investment. So if you're comfortable investing at $500, what your initial investment is going to be. So if you're going to take 20 or 30% for your initial position, right? How much of that you're willing to risk. So, and we'll do the math. You'll do if I invest half of that for my first position, so $250, and I'm willing to risk 5%. So with that being said, you're willing to risk like $12.50 per position, which is 5%. That's a little high, right? But you know, that might be something you might feel comfortable investing, and every single time you at least know what the risk is, and that's $12.50, and you know what your potential for profit is. We'll do the math, and like the potential for profit should always be greater than the potential for loss. So if the potential for profit is like 10 to 15%, that's going to be anywhere from $25 to $37.50. So whatever, and then you at least know, okay, this is my potential reward, this is my potential for loss. I waited for the confirmation, everything is set, I'm going to take my position, I understand the risk involved and the potential for reward. And it's kind of just like, you don't kind of just have to hope for the best. You did your own due diligence, you understand the margins, the low points, the high points, you understand what the dollar risk is and the percentage risk, and it just becomes a little bit more automated. I really don't think that you should have to be dedicating more than 1 hour to 2 hours in a week on this. And if you can make an extra, you know, getting started with $500, if you can make an extra, you know, 5 to 10% on a weekly basis, and then you build that confidence for about 1 month to 2 months, then obviously if you see the growth, then you're going to feel much more confident to invest more money into this market, and then instead of, you know, $50 weeks, they'll be like $100 or, you know, $500, whatever it is, right? I think one of the coolest things when it came down to me getting started is I obviously didn't see success right away, but when I went from breaking even to start making like profit consistently, even the small amounts of profit, I just remember that was the best feeling because I was making money out of nothing.
So like, so I'm a newer trader, and when I first started, I was really overwhelmed with this sport because I was like trying to get my feet and everything, trying to figure out everything, but like I just didn't know like where to go. So like, what would you recommend for someone that's newer and using that group?
I think the main group chat can be very overwhelming, especially if you're like easily influenced, right? We filter out manipulation as best as possible, but there's always going to be people that are going to be talking about what stock they're trading and why it's the best. The biggest thing is that I try to work on with the people that are part of the mentorship is we have our own group chat. So one thing that I'll do is, I'm not too sure if you're a part of that already, I'll add you to that, and the conversations there are much slower and they're much more quality because we actually share, like, you know, the ticker, the support and resistance, where we're buying, where we're selling, and that at least gives you kind of like a sample or a test of what they see, and it allows you to do your own due diligence and see if you actually see the same value they do. So I'll add you to that group chat. I'll add you to the new one because we're going to have a December mentorship. So I'll add you to that one. All right, guys. So that is really just it. I want to thank you guys again so much for tuning in, and thank you to Ella for her time. So I hope that you guys all learned something new. If you guys did, please feel free to give it a thumbs up. And for all those that are getting started, all of this mentorship talk that I was discussing throughout the entire video is this lesson library. It's the first link in the description. And if you guys are not a part of it already, feel free to click the first link and just learn a little bit more about what it is that it has to offer. It's a structured video lesson from A to Z, and it teaches you exactly what has led to my success and what has led to, you know, the number of people that are part of my lesson library and their success as well. So we would love to encourage you to just, you know, try it out and see what it is that, you know, we have to offer when it comes down to being a part of your success. And I also cover 2 other markets. It's investing in real estate and the buying and reselling of the different cars, motorcycles, and exotic cars and stuff like that. So if you're someone that wants to invest in multiple markets and wants to know how to get started, then feel free again to click that first link, and we would love to be a part of your success. The second link is for our free Facebook group. We have over 60,000 members. Ella's there, so you guys can feel free to join. And you know, yeah, that's really just it. Do you have any tips that you want to, because you said something, because when we had our first consultation call, you said something that you made a mistake and stuff like that. Is there something that you would want to recommend for someone that is just getting started?
Just staying persistent with it and going into it steady. Don't just jump all the way in because it is your money. You want to make sure you know what you're doing with it first. But there's definitely a lot of opportunity out there. So if you're passionate about it, there's definitely great growth. And
I think that's the big thing is like when starting out, especially because we're managing our risk so much and we're investing very minimal, your passion has to be what drives you because the return is not always there. And if that's what's driving you, and then that compensation as you continue to consistent and stick to your plan and stuff like that, then the reward will come after. And I think that's the beautiful thing about what it is that we do. All right, guys, and if you guys want to follow Ella, feel free to click the first link down below. She does have a boyfriend, so please be respectful. YouTubers are like ridiculous on it, like YouTube comments and YouTube the viewers, they're pretty ridiculous. So guys, please be respectful. But yeah, we'd love to be a part of your success. If you guys have any questions or recommendations, feel free to leave them down in the comments. Thank you guys again, and like always, continue working hard, continue following your dreams. Let your passion go drive to your success, and let's make sure that we're in the year on a green now. Take it easy, team.
Take it easy.
I'm at my prime. Yeah. I'm at my prime. Whoa. Have I gone too far? Do you detect something different? If you look at